They said it could never happen, yet here we are. An anonymous whale, lugging a colossal hoard of Bitcoin, has just pulled well over 2,000 BTC from an exchange into cold storage. This staggering move, measured in hundreds of millions of dollars, is rattling the crypto world and sparking fresh whispers of an unstoppable Bitcoin ascent. Is this the beginning of a brand new era for digital assets, or is this simply a dramatic flash in the pan? Even the staunchest Bitcoin skeptics are pausing to catch their breath. Today we are plunging headfirst into the heart of Bitcoin's astonishing climb toward the once unimaginable zone of $105,000. You might think it is all hype, but the signs of resurgent optimism run deep. We will piece together every clue, from how jaw-dropping whale activity hints at a permanent shift in sentiment, to why institutional giants like BlackRock and Fidelity have stepped in with open checkbooks. In this exhilarating journey, we will break down how Bitcoin's 3-month rate of change is telegraphing potential bull market behavior, why the global liquidity environment is clinging near a mind-boggling $140 trillion, and how everything from fear-based volatility to the health of certain exchange-traded funds provides a window into Bitcoin's future. Strap yourself in, because the mystery runs deeper than you may suspect. We will pry open the data on the short squeeze that catapulted Bitcoin beyond $105,000 in mere minutes, unmask the reasons behind the weaker United States dollar's indirect push upward, and see how the MOVE Index's dip is revealing less panic in the bond market. Meanwhile, global liquidity exerts its gravitational pull, pressing risk assets like Bitcoin higher and enticing whales to snap up coin after coin as they brace for what could be the next massive expansion phase. So, let us begin with one question. Is this the watershed moment that cements Bitcoin's status in mainstream finance, or a fleeting phenomenon that will vanish as quickly as it came? Let us rewind to what might have lit the fuse on this bull run: global liquidity. Yes, those two words could well be the key to understanding Bitcoin's mesmerizing resilience. In recent weeks, global liquidity soared to roughly $140 trillion, placing it very near the highest levels we have ever witnessed in worldwide financial history. That sum is so vast that it is almost impossible to fathom. Imagine the combined value of countless currencies, entire sovereign wealth funds, corporate treasuries, and more. Now, take that staggering pool and see it flow into risk markets, seeking competitive returns beyond the paltry yields of conventional assets. While the impetus behind this latest infusion of liquidity is complex, a mixture of central bank policies, debt cycles, and capital injections from around the world, the net result is a swelling tide that lifts many ships, including Bitcoin. But what exactly is happening to the dollar, which is often considered a barometer for risk appetite? Well, the once muscular global reserve currency has shown surprising weakness in the face of shifting monetary winds. With interest rates teetering in uncertain directions and investor logic suggesting that future rate hikes could stall, the dollar has slipped, thereby unwittingly giving Bitcoin greater room to run. A softened dollar tends to make alternative assets more attractive, especially those perceived to have a finite supply, like Bitcoin. The story was further fueled by the recent dip in the MOVE Index, which measures bond market volatility. A downward move in that index signals calmer waters for bond investors, and calm often begets more willingness to seek higher yields in riskier assets, namely cryptocurrencies. Against this backdrop, a remarkable phenomenon started emerging in the world of Bitcoin. In the course of just a few days, the leading cryptocurrency broke decisively past $103,000, then hurtled toward $105,000 in a short squeeze that knocked countless bears to the sidelines. Picture the scene. Short sellers, confident that their bet on a sudden correction would pay off, waking up to see that the price not only refused to drop overnight, but in fact soared by thousands of dollars. As a result, many of these short positions got liquidated on the spot, prompting even more swift buying demand to cover those positions. Meanwhile, open interest retreated slightly, drifting from just below 291,000 down to somewhere around 289,000, underscoring that the exodus of short sellers was happening in real time. Now, do not mistake this event for a mere fluke. Underlying indicators suggest this rally was far from random. Over a short window, Bitcoin exchange-traded funds reeled in over $380 million in net inflows. That is no small sum, and it exemplifies just how hungry big money has become for crypto exposure. We are not just discussing the moves of a few renegade day traders. We are talking about established, regulated funds, many playing out in the full glare of institutional compliance and mainstream finance. In particular, major heavyweights stepped forward in a big way. BlackRock's IBIT product topped the charts with around $218 million in fresh inflows, while Fidelity trailed close behind, amassing slightly over $106 million. That appetite is hardly what one would call lukewarm. It is a thunderous vote of confidence that many had once considered improbable. And it is not just the official fund inflows that speak volumes. A whale out there decided that a centralized exchange was no longer the place to store more than 2,100 Bitcoin. Let us pause and appreciate that. The idea of moving more than 2,000 Bitcoins, each trading at well above $100,000, is astounding. This was not a single neat withdrawal either. It started with a chunk of 163 Bitcoin, then concluded with a mind-blowing 2,100 total. Almost all of it zipped straight into cold storage, the kind of place you would stash long-term holdings if you believed the price was going to keep climbing. This is a direct signal of confidence in the coin's future. The old logic says that whales shift their assets into cold storage when they intend to hold. In other words, they are in it for the long haul. The timing of these transactions only pours more gasoline onto the speculative fires. If you are excited by the possibility of Bitcoin blazing past new records, take a quick moment to show your support. Maybe leave a like or a thumbs up if you are digging this story so far. That is our first friendly nudge, because the deeper we venture into this, the more there is to discover about what looks like a genuine phenomenon, not just a fad. Consider the 3-month rate of change, or ROC. It has stayed at a heightened level for weeks, suggesting that Bitcoin's price momentum is not merely a one-off event, but the hallmark of a genuine bull phase. Historically, when the 3-month ROC holds strong, it often coincides with big expansions that keep the cryptocurrency's velocity going. Of course, that does not guarantee future performance, but it bolsters the argument that we might be closer to the start of a bigger run than an abrupt end. Then we must consider the broader context of geopolitics. Weeks ago, some analysts were convinced that mounting tensions in the Middle East would spiral out of control, possibly dragging the United States into yet another military conflict. Such conflict has a curious effect on markets. While it can generate fear, it can also trigger emergency government spending and an assortment of volatile market maneuvers. However, tensions have not escalated to the levels some initially feared. As a result, that swirling sense of doom has receded, replaced by a more stable outlook that paves the way for relatively steady growth in risk assets. If the world is not on the brink of all-out war, after all, it gives traders and investors one less reason to panic. We have all seen it happen before. A single tweet by a high-profile figure, a small rumor of escalated fighting, or a sudden government crackdown can topple Bitcoin's short-term price. This time, though, the market's backbone appears more robust. A combination of a calmer global stage and the infusion of fresh liquidity is fortifying Bitcoin's uptrend, bridging the path to an environment where the coin thrives on sustained confidence. The big question is whether the current calm can endure, or whether fresh headlines will arise to test Bitcoin's mettle yet again. What further cements the bullish outlook is the wave of newly minted believers at the institutional level. Yes, we live in a time where nearly everyone in finance has a strongly held stance on cryptocurrency. Some see it as a meaningless mania, while others regard it as the digital successor to gold. Yet in these last several weeks, the scoreboard of inflows tells a clear story. Major funds are choosing to bet on Bitcoin rather than shy away. The flurry of nearly $384 million in net inflows over a mere 10-day span was spearheaded by juggernauts like BlackRock and Fidelity, but even smaller players showed healthy participation. Even Grayscale, despite a modest outflow approached $6 million, remains well known for its original push to bring crypto into mainstream portfolios. Sure, that might not look rosy at first glance, but the more relevant point is that across the board, net sentiment is positive. Some rebalancing here or there does not negate the overarching story. Investors and regular enthusiasts alike are now wondering, is Bitcoin gearing up to surpass old all-time highs with an unstoppable surge? Or will we see a protracted fight at the $100,000 mark, with price oscillating violently until an ultimate direction is established? It is worth pointing out that the short squeeze we witnessed is seldom a standalone phenomenon. It often sparks additional short positions from contrarians who believe the surge has gone too far, too fast. If that contrarian wave also gets squeezed, it can unleash another upward shock that catapults the price to new records. Those who hold positions over the short term need to tread carefully. Momentum is strong, but crypto is no stranger to quick reversals. The next piece of the puzzle is the dynamic interplay between big government spending, inflation, and interest rates. We are still learning the ultimate impact of successive rate hikes introduced by central banks around the globe. If inflation roars back or other macro hiccups materialize, we could see capital shifting back into safer harbors. However, there is a growing faction of analysts claiming that fiat liquidity pools are not just going to shrink anytime soon, especially with an ongoing drive for expansionary measures in some parts of the world. If that remains consistent, it is a tailwind for all risk-on assets, from stocks to cryptocurrency. Bitcoin, with its capped supply, stands to garner outsized benefits because inflationary pressures in traditional currencies often push some investors to seek a store of value in scarce digital assets. Yet no storyline is complete without a look at the intangible element that so often motivates crypto markets: narrative. That sense of having too much to lose by missing out is rearing its head again. Traders and holders across social media channels are whispering that this time, a broader mainstream acceptance of Bitcoin is happening, with every high-profile name that dives in. From custodial services to blue-chip corporations, the old magic internet money moniker begins to fade. If the public grows comfortable with adding a bit of Bitcoin to their retirement accounts or treat it as a serious diversification tool, we might see adoption rates soar. That alone could drive demand further than any single short squeeze. Now, let us circle back to that mind-blowing whale move, because it is a microcosm of why many are shouting from the rooftops about a new era. The whale in question withdrew an initial sum of around 163 Bitcoin from Binance, in and of itself not too shocking. But upon closer inspection, it was merely a piece of a grander exodus, culminating in a massive 2,100 Bitcoin flight. That is more than $200 million, moved in swift increments. The final destination? Cold storage, a fortress-like environment that resists hacks and is rarely used for active trading. This acts like a public signal. We are not planning on selling soon, we believe the price will keep ascending, and we want our holdings to be safe from any potential fiasco on centralized exchanges. A single whale does not create an entire bull market, but it embodies the sentiment that whales can indeed shape the storyline. At this point, some might scoff and say, so what? Big players have always moved big amounts. True, but the synergy of whale transfers, surging institutional inflows, and an overall rise in global liquidity is precisely what can ignite an extended uptrend. Think of it like each puzzle piece snapping together seamlessly. You have a calmer global stage with fewer risk-off headlines. You have funds funneling hundreds of millions of dollars into Bitcoin-based exchange-traded products. You have whales yanking their stash off exchanges, effectively limiting supply in the open market. Finally, you have a battered population of short sellers who are being forced to buy back positions, adding even more rocket fuel to the price. All these elements are stacking behind Bitcoin's forward march. Yet caution still abounds. Some contrarian analysts say that if sudden fear returns, it might spook even the boldest of institutional purchasers. They argue that the crypto markets are notoriously fickle, prone to violent gyrations. The question of manipulation by large holders also remains relevant. Could whales who shifted their stash into cold storage simply be waiting to redeploy it in cunning ways once the price peaks? Perhaps. Yet so far, the momentum has remained impressively intact, and there appears to be a powerful alignment of many supportive factors. One of the more intriguing signals is the continuing integrity of Bitcoin's chart patterns and the consistent presence of whales who are not day trading, but rather hoarding. This type of accumulation from big players often goes unnoticed in real time, only becoming obvious when the price leaps overnight, leaving both cynics and novices behind in shock. Meanwhile, mainstream coverage by financial media outlets is far more subdued than you might expect, given such a dramatic run. That quietly fosters an environment in which dedicated crypto participants accumulate away from the harsh spotlight, further reinforcing the uptrend. By the time the big headlines finally catch up, the price often is firmly established at higher levels, and that generates even more FOMO, the fear of missing out. As we stand on the precipice of what might be a continuation of the bull run, we must also emphasize that the real story is bigger than price action alone. Bitcoin's underlying network, community, and sense of monetary revolution are all evolving. Technological breakthroughs in scalability and second-layer solutions can create new use cases. Regulations will likely continue to shift, occasionally generating friction, but also clarifying the path to mass adoption. Indeed, for every speculative jump in price, there is a debate raging about how or whether Bitcoin will reshape the fabric of finance. By now, you might be itching to ask, where does this all end? Does Bitcoin keep marching upward past $105,000, $110,000, or maybe even beyond that psychological barrier of $120,000? The truth? Nobody knows with absolute certainty. Markets are a swirl of fundamentals, speculation, technical patterns, and intangible sentiment. But if the right conditions persist, robust inflows, stable, or even expanding global liquidity, subdued volatility, and powerful whale accumulation, this wave could be only the prologue to a bigger story. If you have stuck with us this far, then you already sense how significant these developments could be. So, take a moment to subscribe for more deep dives. Trust us, you will not want to miss the follow-up, as these events continue evolving. Let that be our second friendly nudge. Because the script is far from finished, before wrapping up, let us remember the possibility of twists and turns. The crypto market loves to defy expectations, so it is wise to keep your eyes peeled for surprises. Economic data, central bank decisions, and international tensions could all play a role in reversing the present calm. Yet the fact remains, even if a sudden dip occurs, the foundation shaping this run appears grounded in big macro forces, not just fleeting hype. Billions of dollars have flowed in from powerful institutions, whales are securing their coins away, and the general climate for risk assets is buoyed by a liquidity surge that leaves few corners of the market untouched. In the end, the signals synchronize into a single, resounding message. The crypto world, with Bitcoin at its forefront, is wading into new territory where it is more entwined with legacy finance than ever before. Each volatile twist and turn invites us to wonder whether we are witnessing not just a technological curiosity, but the birth of a new monetary epoch, one that merges the rebellious roots of cryptocurrency with the massive, structured capital of established institutions. The short-term ups and downs, the drama of short squeezes, and the hush-hush whale accumulations are simply the outward signs of a deeper story unfolding. As the dust settles, we may look back on this moment and trace the seeds of a future that marries digital scarcity with unstoppable global liquidity, fueled by both fervent believers and corporate titans. Whichever side of the debate you gravitate towards, whether you are a Bitcoin believer or still lingering on the sidelines in skepticism, it is hard to deny the electric energy in the air. The crowd is stirring. The data is telling a story of remarkable inflows, unstoppable momentum, and unwavering whale conviction. The next chapter may be the one that definitively proves Bitcoin's resilience, or it may be an interlude before the next dramatic pivot. Either way, it is a riveting ride, one that feels as though it has only just begun. And that, right there, is the essence of Bitcoin's allure. It is a live wire in a dull financial world, a shock of possibility that reminds us that the future is not set in stone. It is shaped by the passions and decisions of each participant, one block at a time.